I'm looking at a couple clean charts on my end. Do you want to start or do you
Yeah,
want me to
got a
start?
couple. You know what? I'm gonna let you kick off. Listen,
Okay,
Matt was in the thieving mood. He stole
I
Mark's
did.
joke earlier,
I did.
and he was quick as a hiccup to take somebody. So I'll let you kick her off.
Okay, so what happened actually was me and Frank get into the pre-production show and we're just kind of hanging out, just talking shop, and we get into the conversation of Frank's charts and it usually starts with either Frank or me asking, "Hey, what do you think of this?"
Yeah.
Right? And so when Frank's saying that I stole his pick, I said, "Hey, Frank, what do you think of CRM?" And he says, "Oh man, I love CRM." I said, "I got it. It's mine. It's mine. It's mine." So that's kind of how that went down. CRM's my first pick here, Frankie, and again, one of the things with when you're in earnings season is trying to find things that don't have earnings in front of them and isn't going to be impacted that much from an earnings landscape. Now, earnings in general is always going to impact everything because you get the big dogs that have thematic type moves for the entire marketplace. But then you always get these other software type companies that might report in the next 2 weeks that have a little bit of an impact on that. And so it does impact everything, but we try to find stocks that don't have to deal with that as much. CRM certainly fits the bill here, doesn't have a report in sight for the next few weeks. I like that. What I like about this is pure technical here, Frankie.
Oh yeah.
$200 stands out to me. Number one, it's a significant whole number. I am not surprised, shocked, even slightly. It makes complete sense to me that the market hovers $200. It's one of those numbers that it takes a little bit to break out of that number, and you want to see that dance, right? You want to see the market dance a little bit before it goes into that breakout. I got this as an ascending triangle cup and handle type continuation pattern. And when you're in that ascending triangle continuation type pattern conversation, you're talking about the starting point of a new trend, not necessarily just attaching yourself to whatever happened in the past. And so I like that we're going into a continuation pattern. I love the high base here, Frankie, on the right
Yeah.
hand side. I love that high base. Look at this short term consolidation. It's obviously telling you what the number, what is important here. It's 200, but you haven't given up anything this week, just hovering that 9 EMA. That 9 EMA is playing really good defense. You got your cup, you got a little tiny handle there. Look at that $200 price point here, Frankie. Now you come out to a little bit of a longer term time frame here, Frankie, and this is why me and Frankie really like this type environment on CRM. It's not just the daily chart that if you break out of 200, you got some open air. When you're looking at this on a weekly chart right now, you're high basing against that $200 price range, the 200 SMA on the weekly chart that has previous pivot analysis with it as well. And when you're breaking out of that level, there's nothing until you get to 220. You break 220, there's nothing until you start working into the mid 240 levels. And so you just like the cleanliness at the top. And then if it breaks out, there's really nothing there on shorter time frames. Now, Frank, we're talking short term, but I'm going to go to the monthly chart as well, because this is what multiple time frame analysis is. It's looking at the different time frames to see if everything converges to an entry and if everything allows open air. And on CRM, you're breaking above the 50, you're breaking above the 20 monthly. And so when I say you're breaking out of everything, I legitimately mean you're breaking out of everything. Let me hold on, you don't even have to worry about it because it's already on top of everything else on the quarterly chart as well. And so from a daily chart to the and I didn't do intraday analysis because I don't have to, because you're fighting at the top end. And so from intraday to daily to weekly to monthly to quarterly, This is a breakout. It looks simple to me above 200. Stop loss most likely underneath 195, hovering that 20 period moving average, certainly using the 9 EMA. Targeting wise, I think 220 is an easy T1, 240 is probably T2. We'll dial that in the scanner report because this is going to be on the list there, Frankie.
Yes.
I don't see this one
This
getting
is
vetoed.
this is a spoiler alert. This one will be on the
Yeah, this
reports.
one's on the report. What do you think here?
Listen, I dare somebody to try to veto it. They'll get it. It'll be a fun moment for us to yell at
You
them.
and I will just sit there and won't even say anything.
Oh, I think we'll probably say a lot.
we'd have a couple sarcastic comments.
We might have a few things to say. Yeah, I mean, I love this chart. It's probably my favorite. It's so clean and the multiple time frames, as you illustrated, line up so nicely. We were having a chat in over on Discord as far as, you know, breakouts and entries, and you and I both kind of were of the school of thought that you want to see this close because there's a lot of room, right? This is a lot of stuff.
Yeah.
And I kind of, you know, I tried to simplify it. If there's a lot of stuff, a lot of reasons to like it if it breaks out, but no chance in the world that you would front run it, i.e. CRM here, then you probably, at least I probably want to close. If it's just a little bit of a high base or not a ton of resistance, probably going to be looking a little bit more of an aggressive entry. Had some good conversation on that over in Discord. I like a close above 200 with some follow through. Yes, 100% yes.
And for me, I'm right there with you. I think you wait for the close and then your 10% ATR above the closing candle most likely, right?
Yeah.
I do think that. Now in the scanner report, we won't be able to see that because we prep these stocks today. Our entry is going to be above 212. But again, that's a subjective. That's if you're looking at the price today. If for me, it's always going to be a conversation of confirmation be non-confirmation. If you want to be aggressive, probably 25% of the ATR above the breakout channel is legitimate enough to be aggressive on entry without confirmation. But a lot of times when we're looking at a clean breakout, most of the time you're going to wait for confirmation, not going to front run that breakout, make sure that it can hold its head above that water, right?
Yep.
That it can, because if the target was 210 and you got a short porch, maybe you're a little bit more aggressive here, but you got some open air here.
Big window to work with.
My philosophy is don't get faked out here. Let's see the close and then let's giddy up and go.
Yep, absolutely. 100% on board with you there. I love it, Maddie. And I love that they don't have earnings because I'm going to bring somebody who won't be on the reports because they file a day short of the earnings rule.
Break a rule. What do you got?
Shoppy Shop. Very interesting.
It'll get vetoed, but only for the report.
Yep, it won't be able to make it for the report. CRM will be. I'll be shocked if it's not, but Shop will absolutely not be. If we had one more day, it probably would be, or at least it'd have a legitimate shot. But such is life. If your rule says, hey, you can't, trade 14 days before earnings, then you're probably not interested in Shop. I always like to just, hey, I'm going to be out before earnings, right? Mm-hmm. If this were to say trigger on Monday morning, I have a few days to basically have all next week to be in the trade and be involved before I have to really start dialing it in.
Yeah, that 10 candle rule is for us on the scanner report.
Correct. It doesn't have to be for any one individual, right?
Yeah, it's the scanner reports because you don't want to hold a short-term trade through earnings, basically.
Exactly. And so this is one of those type of trades, but a few things I really like. I mean, the turnaround story has been nice on Shop, right? And then here recently, it's kind of messy and kind of tough to realistically catch. But you had that nice little breakout that kind of established over the course of late March into about a week ago. And now you're kind of just drifting back into that 9. So you're continually making these higher highs and higher lows. Unlike some things out there, you've really maintained the momentum and maybe you can argue increased it to a certain extent. But what I really like about this, Maddie, is this is a cheap trade, a cheap risk type of trade with good risk to reward. I think you are basically looking at getting in over yesterday's high. So at 48.74. So I'm going to call it 48.75 to give it
right above yesterday's candle.
Right above yesterday's candle. We're going to looks like, at least as of right now, we have that inside bar right above the 9. So
that's really good intraday too. Can I just
add of course.
One context? Yeah. Look, Frankie called out for for yesterday's high, not today's high, yesterday's high. There was a reason for that, because when he's looking at both days, he's looking at this short-term neutrality, because if you go above today's high, you're still staring out down the barrel at yesterday's high.
Yep.
And so you look at that wick comes in, where did it come into? It tested yesterday's high. You want to get it, you want to break out of that. And so you look at this neutrality here on the intraday, that's what you want to get above. And so I just wanted to add a little context.
So yeah, that's spot on. Appreciate that. Because yeah, sometimes that's worth paying for. And this, in my opinion, is definitely one of those times. We know that we are relatively close to earnings, so we aren't going to be using a super loose stop loss, right? Because I'm not holding this to earnings. So I'm also going back to yesterday's candlestick, and I'm using that as the anchor. That's going to give me some intraday support, as well as the 9 EMA, right? Because that thing's going to creep up and line up with that probably very, very, very soon. So relatively low on the risk. That stop loss is going to come in right around 47.60, give or take, somewhere in that ballpark. We are in a window, right? I mean, we do have a path, probably not super likely in this short time frame that we have, but there is a path into the low 53s. There's no resistance of note that scares me. Yeah, when I start to get into those 53s where I've kind of seen some topping, back in February, yeah, I'm not going to target past that, but I'm not going to have to worry about that because I'm not going to have time for that. I'm probably not going to have time to get to 53, but momentum is a funny thing. Right? Two candles that look like mid-February candle, especially on a shop, right? All it takes is, two candles that are momentum style candles, and all of a sudden we're knocking on that door. Hey, if that happens, I'm looking at somewhere in the ballpark of 3.5 to 1 on the risk to reward. That's fantastic. If I'm able to pull that off, what do I need though? I need to basically get to like 51.50. I need to get basically an ATR past that last swing high approximately to have a over 2 to 1 trade. I think that's more than reasonable within the week and change that I'm going to have to be comfortable within this trade. So playing this off of the bounce, seeing where it can take me. I like that we're in the window. The only real cold water is the earnings are approaching. This is one of those that if it was a break, I'd say it's kind of got to break tomorrow, right? Or Monday. If this has a red bar and doesn't trigger me in on Monday morning, probably going to take it off the watch list. It is going to kind of fall into that camp where we want to see this happen sooner rather than later. At least I do. But I think there's something here if we can get that break out of that yesterday's high.
Yeah, I like this flag. I like it a lot. Breakout, came right back, snapped back against support, hovered the 9. Looks pretty clean. Looks really, really good, Frankie. I like the pick. All right.
It hurts me not to be able to bring them to the meeting for today.
Just
but
one comment.
Yeah, me too.
Just one comment on these bougie underbelly type high volatility plays. The really good ones like DraftKings, Shopify, they've been really resilient.
Yeah, they have.
Very good.
Like, and so, the upper tier of the underbelly has had some decent price movement. So it sets up for a good trade.
Is the upper tier of the underbelly now officially called their little bougie? Is
the bougie part of the underbelly, right?
The high end class of the underbelly.
The bougie underbelly.
Right? I see what you did there. All right. So Frank, you went shop. I went CRM. Both look good. Went on a continuation breakout, and then shop on a really good flag. All right. I'm gonna go my bear. My bear.
Okay, who are you going with?
And there's some good clean bears out there. There's just not a lot of good clean bears. There's not a lot of
anything, right?
Charts, but there's not a lot of great clean bears out there. But there are a few, and the few do stand out, Frankie. I know you got one coming down the road that's really clean as well. I'm gonna go with Billy, Frank.
Ooh, all right.
Yeah, I'm gonna go with Billy. The reason I'm going to go with Billy is because I was going to go with yours, but then you took yours, and so I had to go to my second one.
Well, I saw the game we were playing this morning. I was like, I got to start calling out symbols.
Yeah, I know. I called out CRM, and all of a sudden Frank's just throwing symbols out like he missed out on shotgun. So I kind of missed out on that one. But I like it a lot for a couple different reasons. Significant whole numbers mean something to me. $20, $10, $50, $100. One of the reasons why I like CRM so much is it's not just clean against 170, 180, 190. It's really clean against 200.
Mhm.
$20, a little bit of a similar conversation here. You see that $20 handle right there. You've given up all your short-term moving averages. You've given up your momentum moving averages. Now you're hovering right there on that support level at 20. You break 20, it's a clean journey down to 18. You break 18, it gets really ugly underneath. And so I like it's just a base hit to 18, but that can open up to something a little bit more underneath 18. You come out to the weekly chart here, Frankie, and you're going to see a little bit of what I like on this stock. Once again, these little wicks over here, that's the 18 target. That's not a wick that, ooh, do I have to take into account the wick? No, the scale's off because this is a stock that has catered for a long time. And now you're looking at that $20 handle and you're saying, okay, the same way when we were looking at 30 here, hey, you break 30, that looks good. Now you didn't do it. You break 20, it looks good to the downside. And so when you're looking just kind of skilling in here, you see that break of 20 here. Nothing on the weekly moving averages got you concerned. You're underneath all of those as well. And so it's just a really clean chart underneath 20. It opens up down to around 18, maybe 1825. But once again, you start navigating those wicks. That's just a decent base hit. Now, once again, when I come out to the scale, ow, that doesn't look like anything besides nothing, right? That's 10% underneath the current price. That's what those wicks represent, a 10% movement underneath the current price. And so you look at this on a daily chart, real good breakdown, just targeting the low, these candles and wicks over here. I'd call it 1830 is what I would call it, Frankie. That's just that base hit, but you got a tremendous, tremendous reward to risk ratio here because your stop loss probably north of about 21, I would say. Probably right above this cluster of moving averages between the 200 and the 9. And so stop loss above 21, entry underneath 20, target in 1830. That's not the reward to risk ratio I'm talking about. The reward to risk ratio I'm talking about is what happens underneath 18. If you get underneath 18, which also coincides with a bunch of chop over here, there's nothing until 12. There is nothing until 12. And I'm not saying it gets there on one leg. I'm saying that's a good environment for it to work down into that where you can see some decent volatility. And so whether it stops at 15 or 14 or 16, I don't know. What I do know is there's nothing in the chart that suggests it would stop at 14 or 15 or 16. And so I do think there's some open air underneath that 18, little bit of a base hit just to 1830. The real trade is if we get some volatility underneath that level and see 18 get broken. What's your thoughts?
And you know what I really like is you're going to be right about 2-1, and you might even be able to massage it a little bit if you dive deep, but you're going to be very close to 2-1 just to that 18, right?
It's like, it's like 1.7 to 1.
Yeah, so you're going to be really, really close.
Well, and if that's your first target, Frankie, you don't need 2-1 of T1. You need
no. So you got. I always like that when that first target zone is
is above 1-1.
I mean, the higher the better, right? Nice little. I also love that we broke the 200 a couple of weeks ago. Didn't get any follow through. Anybody who knows me, when we're talking about moving average trades, it's close follow through, right? I'm a broken record with that. So we got the close, probably thought, 2 weeks ago it was going to drop, no follow through. And now breaking that 20, there's that follow through, right? And it's had more opportunity. It's not as extended as it was in the short term when that initially broke. I really like it. I think you're in a pretty good spot here.
Cleaned up the intraday on that entry too over the last 24 hours or so. Look at kind of it get dialed in right there at about 2004, kind of fight the lows there. I'm discounting the overnight action there, obviously. What do you got second?
Very nice. All right, well, I'm coming back to BBY, Didderman Trade Masters.
Yeah, they're
still super clean, right?
Just a hovering, aren't they?
Just a hovering, and it fought yesterday. It didn't win, but it did fight. Nothing crazy here. I think we're looking at taking out that Thursday low here as confirmation. Let's break through that low. That would make me feel comfortable that this thing has given up the fight. Let's get below that. That's what, to give us a number, 72.45.
Or
So
are
I
you
need
talking about the low?
the low from yesterday. Yeah. So
Low is 72.29.
29. Okay. Yeah. So
Yeah.
I was looking at today. So let's get below that. We basically have, again, it's kind of like one of those where there's really not a lot. You do have some history down in that $8 range, all right, where you've had some old highs in days gone by. And that's kind of, stands out a little bit. It was resistance a few times, support a time or two. So I think we are looking in that 68 range as kind of that first window. It could be, again, one of those situations that could be T1, and I think we can still make it work to risk to reward. That's not like a tremendous amount of history, right? But there is some there, and I think it's worth respecting. If that goes, all of a sudden we can start looking down into the 64, 65 range, where we have kind of those next lows and chop that we had to deal with. Really just a clean little breakdown. Stop loss, I think we've got ample evidence as of now. Probably, I didn't say this on Trademasters, but I feel comfortable I can say it now, probably above that Tuesday high, because we've tested it twice, right? Tuesday, we were kind of flagging-ish into the 9, and yesterday on the rally, we kind of ran right up into that same price and got knocked back down there. That starts to stand out as a little bit of a stop loss location, puts us, a little north of $74. Obviously, there's other ways to set stop losses on breakdowns, but I think you want to pay for some stuff, and I think we can afford to do just that. Just like this is a little bit of a breakdown candidate. I like that it hasn't tricked me or anything like that, right? Yesterday's candle, it looked like maybe the bulls were going to try to put up a fight, and they did early, but it's not how you start, it's how you finish, right? They finished really, really poorly. If that low gets taken out, I think this is a go, and look to fill up into that 68 window, kind of the primary target or target one, and then open up into the 64, 65 range if that goes.
Frankie, I like this one a lot. It's got a good breakdown. The story kind of writes itself over the last week. Good low base. The only question is the entry. I do think you're underneath yesterday's low. I think that's kind of gave us the, we were looking at it earlier this week, perhaps on a potential breakdown. Tested underneath that yesterday. Could have got some people in, no doubt. Still looks good though. I like it. I like it a lot. All right, I'm debating over here, Frankie.
Well, listen, it's your last one, so I know you're going to go with a bull, right?
I'm definitely going with the bull. I'm debating 2. Actually, I'm debating 3.
Okay.
But I'm really kind of debating 2 now. I'm going to ask you, do you want to break out to the breakout king, or do you want a standard bullish retracement without confirmation yet, but looks pretty good coming into next week?
Well, I'm going to go with a breakout, and I don't want you to steal it. And I know it's on your list. I don't know if it's on your short list for this, but I know you have it in your watch list for this week.
I know.
So go ahead and give me that developing retracement. I need one of those.
All right, I'm going to give you the retracement then. Okay. I thought for certain you were going to give me the breakout, but now you're not getting the cleanest breakout outside of CRM. Kidding. My breakout, what I was going to bring, if you don't bring it, will be on the report. Don't worry about that. It will be on the report.
All right, I like it.
And I will tell you if you bring up your breakout, if it was my breakout too. I will tell you.
All right. I'm good with that.
All right. So you wanted a retracement here. I'm going to go with Dell.
Ooh, all right.
Yeah, I'm going to go with Dell. And this is a conversation that is developing, that needs further development, quite frankly. Green candle still went down today. That's the identification in the first. And this is what retracement analysis is. Retracement analysis is zones that you expect those buyers to come into, and then waiting for those buyers to give you some confirmation. That's retracement analysis. The first zone that you're looking at for the buyers to step into, number one, this is a trend with momentum right now. And so you got some bullish momentum on this trend. You got an elevated increasing threshold of bullish momentum. Look at the price movement from the low here, 37 up to 41. Then it drives from 30, basically 40 up to about 45 and a half. That's increasing momentum in trend. That doesn't mean you can continue to expect the next leg to increase versus the last leg. That's not what it means. What it does mean is you have a higher probability that you will achieve at least 45.5 is what it means. And so when you're looking at the trend, you got a good consistent bullish uptrend with bullish momentum in the last leg of the trend. That's a higher probability for the continuation of that occurring. And so when you're looking at the price now, the first zone you look at is you look at that 9 EMA, right? And you want it to be clean, but it's not always going to be clean. You're just in the zone. Remember the analogy of technical analysis is not, and specifically support and resistance are not man-to-man defense. It's a zone around those areas. And so you're in that zone of the 9 EMA. Now, obviously, I'd like to see it get back above the 9 EMA, but that's the first logical catalyst that you can expect some slowing momentum. And so the first thing you want to look for in bullish retracement analysis is the retracement slowing down. Then as the retracement slows down, you start to look at it and say, okay, what are the other parameters in bullish retracement analysis that I'd like to go through? Now, when you look at the step system, which is our swing trading system at Tackle Trading called the step system, you want to look for slowing momentum, and then you want to look for that upward movement in price. Well, where are we going to get that upward movement in price? Let's go into the 30-minute chart here, Frankie. So we have increasing momentum in trend, and we have decreasing momentum in the pullback.
Yep.
That is a good sign. Increasing momentum in trend, decreasing momentum in the pullback. And you saw that in just the size of the candle, but you also see that in the vertical distance between what's happening in your pivot analysis on the intraday level. Look what's happening as the market starts working a little bit lower in the bullish retracement. All of a sudden, the lows go from 44 all the way down to 42.75, all the way down to 42.50. You see that slowing momentum. You see that U shape start to form here, which is really, really good for bullish retracement analysis. And then what I like about it, Frankie, is you got a really, actually, my EpiPen isn't really working here. But when you look at it like this, you also have a pretty good little trend line coming down here. And I'm just going to connect those pivot points right there. You have a trend line coming down that you're now, because of the slowing momentum, violating that trend analysis as well. And so everything is pretty textbook technically. The only question that I have is, and even on the stop loss, if the market confirms on Monday from here, stop loss placement is right here underneath 42.5. Easy. Yes. You got that's the low price of the bullish retracement. There's not a lot of volatility in this pullback here, specifically talking about today's price action. Obviously, right, we were dealing with a little bit over here, but right here, there's no volatility in that. That's the market showing you, or not showing you, but kind of telling you that support's being built here. And so the only question is, well, you got two remaining questions. Where's the entry and where's legitimate targets here? Number one, stop loss. And again, this is based on confirmation. You have to have confirmation on a bullish retracement. You're not buying a doji against support on a bullish retracement, or you're going to learn about depths of retracements very, very, very
learn
quickly.
The hard way.
One way or the other. One way or the other. You're going to learn through the school of hard knocks, or you're going to go get some proper education, but you're going to learn the valuable lessons one way or the other. And so in terms of this, you got to be looking for confirmation. The question is ultimately, where is confirmation? I think you can't be looking. I think you got to be looking at 43 here, Frankie. 43 is slightly above the 9 EMA. The high of today is kind of coincides with the 9 EMA. So I think if you can get above 43, whatever that candle is, let's look at that candle above 43. But I do think confirmation starts with the price getting above 43. Stop loss, once again, underneath 42.5. More than likely, Frankie, that confirmation candle's probably up here. We're talking an entry above 43.5. That's the most likely scenario, right? The most likely scenario isn't the candle confirms at 42 and we get a wick above 42.05. The most likely scenario is the market comes back into yesterday's high and we're dancing this 43.5 entry.
Yes.
That's the issue with confirmation on retracements in live programming, is they're not happening right this very second. You got to talk about where they could form. And so I do like confirmation starts for me above 43, but I want to see a close, and I want to see a close above the 9 EMA. And then whether it's 5% of the ATR, 10% of the ATR, either one, just something really, really tight against the high of the day. And then targeting wise, Frank, I think targeting wise here is pretty simple. Target one is you're just targeting up here around 45.
Yep, that's a recent high.
Little, you just target the recent high. It gets a little bit better once above 45. You can work probably up into this range right around 47 and a half, 48. I don't think you get to 50. I think you got to target 48. So again, pretty structured bullish retracement. Entry is going to be a little bit subjective based on the close of the confirmation candle. Let's see that first. Stop loss under whatever the low is. Once again, right now it's 42 and a half. We see another down day, that might change. That's bullish retracement analysis without confirmation. And so that's what I'm looking at. Frankie, what are your thoughts?
Yeah, I like it, especially if we get that from whereabouts where we are.
Yeah.
Right. Any deeper, you know me, Maddie. If it were to pull back to 20, I'd still be like, okay, we could kind of apply some similar things that you discussed, but I wouldn't be as intrigued, right? But if we see that confirmation candle on Monday or early next week, kind of hold this low of this doji, your risk to reward is going to be really good. Your momentum is strong and would remain intact in that scenario. Really like it, especially if we can get there. And I like the call out. Not sure where the entry is, but if I had to put an entry, it would be above yesterday's high, right? That's kind of imagining the candle development that is likely if we get it, right? So I like the call out there. Good little retracement.
Forming. Now I'm
forming.
interested. What was your breakout? I'm really interested to see if it was my breakout.
Well, my breakout is Roiv.
It was on the short list. It wasn't my breakout.
Who was your breakout?
My breakout was Aerospace and Defense Company, AXOM.
Oh, okay. So you're looking, okay.
Yeah, I'm looking at Axiom here, not N-A-X-O-N. There we go.
There you go.
Yeah, it's very clean breakout, very similar to CRM, very similar analysis to CRM. Instead of 200, it's 230, but it's one of the better looking ones.
Yeah, definitely a clean one. I was going to throw out First Solar just so I could complain about earnings. Look at that developing breakout. Maddie,
that 220 breakout.
Unlike Shop that I could still map a trade out,
that's
luxury on First Solar. No, this is why I complained during earnings. But I like this Roiv, Matt. I really do. ROIV, a little bit of a small cap biotech type of stock. Not going to be for everybody. I understand that, but you got a really clean $9 breakout candidate here. Run into it back in February, fail. Run into it back in March, fail. Run into it this past week so far, failed, but we're playing some good defense up here, right? Got to get through it. If it don't break, there's nothing to see here, right? But if we do break, got a super clean window to $10. So 9 to 10, that's a pretty good window of
that too. I mean, it's just a good window.
It's just, I mean, that's all this is. This isn't I want to buy some Rove and throw it in my long term. I don't know enough about them to do that, but I don't need to for a trade. I like this $9 to $10 window. So we got to get above 9. We got to get above 9. We've not been able to do so.
Is this one of the ones, because you and I have been talking, and I guess the conversation in Discord this week on stop loss placement kind of sparks this question. But when I was looking at CRM, I'm calling for a confirmation above 200, right?
Right.
When I'm looking at my bullish retracement on Dell, I'm calling for confirmation above the 9 EMA, right? Here, because it's one of those stocks that can move pretty aggressively, biotech stock, for example, market is obviously telling you $9 to trigger here. You got a short porch to 10, and it could be quick, right?
Absolutely.
And so it is one of those scenarios where if you're not aggressive with your entry above 9, you might miss out on the trade altogether.
Yeah, which is fine.
That's always fine. And that's kind of my question for you is it still one of those situations? Because I know you agree with me on the confirmation call on CRM, and I know you would agree with me on the confirmation call on Axon and so on and so forth. But is this one of those scenarios where, because of the name, because of the industry it's in, and because of the cleanliness of 9 and the short porch to 10, where you might be a little bit more aggressive and say, I'm not going to get confirmation, but I'm just going to get an order above 9 to trigger if we get above 9.
Yeah, I mean, that's a good question, and it could go either way. But for me, there's just really two things that I think we can get above, basically above 9. We don't have to pay for the confirmation, although I would fault nobody for doing so. One, it's just a clear level, right? That's all. There's nothing else.
It's very clear.
Unlike
Wicks,
CRM, where
bodies,
there's,
everything.
you know, but there's this average and there's that, right? And there's the big round number. I mean, hey, 9's a round number, but I don't think I'm going to confuse it for 200 anytime soon.
Yeah.
So it's just kind of one thing, right? Yeah, we've tested it a few times. It's something that we absolutely should respect, but it is just one thing. And I'm going to couple that with the fact that we have momentum on this, right? So it's not like we worked into this and had a deeper pullback.
Too.
You know, we've got the volume, we've got the momentum. If we
Yeah.
were to kind of dip back down into the 9 next week, take a run up to 881 in the middle of the week and kind of start coming back and start to lose that momentum, gauging that by the 9, okay, that would be a little bit of a loss of momentum, which would make me favor an aggressive entry a little bit less, right? But
Yeah.
because I just have that one, yeah, it's 9, right? It's 9. There's not
Yeah,
other
that's how I
things,
see it too.
and the momentum on my side, I would feel okay doing that. You know what's really cool though, Matt? And this is what's super awesome. I can do both. I can set up a partial
scale in.
entry at 905, 10% of an ATR above $9.
When
move
in
in
doubt,
with part
Frank
of it.
Skellen. Yep.
And if it's, you know, if it wants to just blast off to 980 that day, sweet, cool. If it puts me in a spot where it closes at 911, cool, I can get in and add the rest of the trade. If it fakes me out, hits 905 and then flips back around, stops me out, at least I lost a third or a half of the trade. We don't have to go all in, guys. And a lot of times,
Yeah.
I know you don't, man. I know Mark doesn't. I know I don't.
Nobody does.
We don't have to go all in. We can work our way into these things. And so hopefully that gives you some ideas, right? How
I see it as a clean entry with the short porch. It's one of the scenarios, name, space, technicals, environment, just leads me to an entry of 905, put a buy stop limit order above that level, target 10, stop loss right underneath the wicks there. I do think it's one of those situations where you could rationally be aggressive on the entry versus a lot of times when we are absolutely waiting on confirmation.